I want to get your opinion. Yesterday, I vacillated and waxed on about the breadth of the market, and there was new low after low. In other words, the breadth of the market is something we should be worried about. Jim McCaughan, are you worried about the breadth of the market in the United States of America?
Not really, Manus, and it's great to be with you. But I think actually the variation of returns between different securities, with the market hitting new highs, but still quite a lot of stocks at a 52-week low, is actually in a perverse way good news. The chartists wouldn't agree with that, but I think if you're an active stock selector, this is very good news because it means some stocks are going up and some are going down. So the scope for active stock selection to be successful for a while. And that's been true so far this year pretty well every month. I think that in a sense, at least for some people, the lack of breadth in the market is actually good news.
The lack of breadth is good news. The other, I suppose, principle this morning, Jim, and I want to get your take on it. We get the jobs report later today. We had the PCE yesterday. Again, a disappointing PCE, personal consumption expenditure, Jim. So to that end, the bond markets, if I'm in bond markets, I would have earned nearly 1%, 0.95% to be precise. And I would only have earned 0.2% in equities this month. What is the bond market telling you? I'm just showing the stocks versus bond, Jim, on the screen for the past year. I just wonder, are the bond markets sending me a bigger warning shot than I'm aware of?
It could be, Manus. One of the things I'm concerned about is policymakers, particularly central banks, are looking for signs of inflation. They dearly want inflation as their excuse to normalize interest rates. Now, there's a whole lot of things going on in the economy, notably with the implementation of technology at an ever more rapid pace and the aging demographics that are fundamentally deflationary, meaning that prices are under pressure. There's relatively little pricing power in the global economy for manufacturers, for commodities. And I think that the hope of inflation that many policymakers have may be disappointed. So I'm suggesting that around about 210 on the US 10-year yield is suggesting that the deflation ain't going away anytime soon and that we're actually going to see a very low inflation environment. That's not to say that they should not raise rates. They still should raise rates because even at zero inflation, a point or two of interest rates is not a bad idea.